Welcome. This is Business Now, a product of the Oklahoman's Business News Department. This show addresses current business issues that are relevant to you, our users, and readers of the Oklahoman. It's sponsored by Bank of Oklahoma. I'm CLYTIE BUNYAN, business editor, and joining me today are Mark Funke, president of BOK Oklahoma City, and Greg Wheeler, CEO of private banking for BOK Financial. Gentlemen, welcome.
It's great to be with you this morning.
Thank you. Well, it's been quite an interesting time we've been having here lately in the financial markets. Today's the first full trading day since President Bush signed the $700 billion bailout package on Friday.
Correct.
And the markets were down, ended down on Friday, were flat a lot throughout that day. And it opened this morning, and it's just killing. What's going on? I mean, why is the market the way it is? What would have happened if the president didn't sign the bill, if the bill didn't pass?
Well, I think there's a couple of you have a couple of questions in there. Let me start with the first one. The bill passed. It did pass. It is but one step in a process. It is not that the bailout bill is not the end all be all for anything, any of the economy, and for the most part, there'll be required to be other steps that have to be taken by both the government and by companies in general to get us out of the position that we're in. The volatility will continue. There's no doubt about that. It'll probably continue. We expect through early spring, you'll continue to see things until the Fed lowers rates. Which that's built into the market today. There's a 50 basis point decline in interest rates built into the forward curves until there's some other technical things addressed in the Fed with our central bank. One of the biggest of those has already been addressed, and that's the paying of interest on deposits held at the Fed. That was taken care of this morning.
Right. Mm-hmm. Now, one of the things I've been wondering about, and we've heard people talk about, is with these wild swings on the market, why haven't we been seeing curbs in trading?
I don't think the government wants to put any additional. I mean, if the market got completely out of whack, I'm sure they would cease in that. Mm-hmm. But at this point, I don't think that's probably something the regulators want to do.
Yeah.
There are market curbs built in, but they're based on percentages. And as a result of the percentage swings, we haven't seen that big of a decline relative to what happened in October of 1987. Mm-hmm. And so I think if we do hit those percentages, the curbs will come into effect.
Yeah. So the 700-point swing we had a week ago, that's not a huge percentage swing.
Not when you think about where the Dow was, as an example, in 1987. It was roughly around 7,000, 6,000, 7,000 today, and so a percentage swing is 700 points is not that big of a deal.
What are some of the concerns you're hearing from investors now? Their fears, concerns.
Well, it's a combination of things. If you think about depositors first in the bank, a lot of their questions are about FDIC insurance and are my deposits insured? In our world where we also manage money for a lot of customers, there are concerns about where's the market going, and Greg addressed some of that. I think what we try and tell our customers is don't panic, number one. Don't do anything irrational that could cause you to regret that later on. If you've had a fairly steady course of investment over a period of time, you've been generally conservative, stick with it for the time being. I don't think there's any reason to panic and pull everything out of the market right now. Secondly, on the FDIC insurance, with the new plan that just came into effect today, FDIC insurance has increased to $250,000 for depositors, and that's in effect, at least on a temporary basis, until December of 2009. So over a year now for the deposits to be up at that level. So I think from the general consumer, with deposits in the bank, no worry. I wouldn't be concerned about that if you have an FDIC insured bank. But we're getting questions about that because people don't understand. And in some cases, the FDIC insurance is a little complicated in terms of how your accounts are structured and how much insurance you can actually build up. At Bank of Oklahoma, we have folks that can help you understand to make sure your accounts are set up properly to maximize the amount of insurance that you can get. But that seems to be the main thing people are concerned about today.
Okay, get a little more specific on the FDIC insurance. We know it's increased, but what did it increase from for savings, for retirement accounts?
Basically, it was $100,000, and it covered virtually all bank deposits, whether it's a savings account, a money market instrument, your regular checking account. Those accounts are all insured previously at $100,000, and now that's been raised to $250,000.
Now you're talking cumulatively. Say you have all
per account.
Per account.
So if I have an account individually, it's insured up to $250,000. That's one account holder. Then if my spouse and I have another account in both of our names, that account's also insured up to $250,000, and so on. So depending on how your accounts are structured, you can actually build up quite a bit of insurance on various bank deposits. And there's a lot of ways that we can help our customers even expand on that. At Bank of Oklahoma, we're a little bit unique in that we have a branching structure for our company that has given us charters in different states. So as a result of that, without going anyplace else, we can place deposits with other subsidiary banks of our own company in 7 different states to allow them to have even more insurance coverage. So that's an opportunity that our customers have through us.
Talking about the markets, we hear a lot about that we're in for a long haul in a bear market. Where do you guys see the markets being at the end of the year? By the end of the year, but that's short enough term.
Well, I left my crystal ball at home, back at the office actually this morning. But I think you'll see the markets continue to fluctuate wildly, but we'll fall within a trading range of. We expect that we'll be about flat by year end from where we are right now today for the equity markets.
I mean. We talked about insured banks, and you talked about savings accounts. One of the concerns that we have seen is that people aren't really clear on the differences between retail banking and investment banking. Can you guys, or a retail bank versus an investment bank?
Investment banking is really not consumer oriented. It is an investment bank provides the sale and underwriting of securities to gather capital for primarily large corporate entities or government entities. So that's a completely different type of banking when they're going into the public market, attracting funds, selling or underwriting bonds or some other kind of debt instrument to gain money. Investment banks also consult on mergers and acquisitions for large companies. Whereas a retail bank or a commercial bank like Bank of Oklahoma,
right,
we're focused primarily on small business, middle market companies and consumers. So the whole spectrum of our customer base is a little different than an investment bank. That's kind of the primary difference between the two.
We're hearing so much now about the credit markets being so tight. Who can get a loan? What's the profile of someone who can get a loan for a mortgage, who can get a loan for a car?
Well, it depends a little bit on liquidity is the biggest probably concern right now in the entire financial system. As liquidity has dried up because of large losses and the type of things that has happened in the financial industry, liquidity's dried up. So the apparent movement of funds back and forth between banks has slowed down, and the ability for large corporate borrowers to borrow large amounts of money through commercial paper and things of that nature have dried up just a bit. But an individual in today's environment, in an Oklahoma banking environment, which is very strong and solid today, that has good credit, can get a car loan, can get a mortgage loan, can get a small business loan. We have not shut off lending. Bank of Oklahoma, our lending so far this year is up 8% over what it was last year, so we have not shut the door on that. I would tell you, though, that an individual's credit needs to be very good. An individual company's credit needs to be very good in order to obtain credit today.
What's very good? What do you consider very good? FICO score?
Like a FICO score? Anything probably, I think the average FICO score in Oklahoma is around 690. Anything probably above 670 is probably going to be able to get auto loans and car loans and things of that nature, and that would kind of go up higher. The higher that FICO score, the better the rate structure probably will be for that borrower because the risk would be lower. But generally, above 670 is probably a number that you need to be looking at, unless you want to be going to what I call more of a subprime environment, which it would be available today if you wanted to try and get into it, but much more expensive. And we're not, Bank of Oklahoma is not in that market.
Okay, and not in the subprime market.
No.
Okay. One of the things we're also concerned about is banks, as you said, not lending to each other. You know, that it was kind of, the squeeze has been put on that there for a while. It's a little tight. But the rescue package, the bailout package, is supposed to address all those issues, or to help get things going again. Since that would be done sort of behind the scenes per se, when will we as the public know that, okay, banks have resumed starting to get that money flowing again among themselves? What kinds of indicators can we see to say, okay, things are moving along now?
Well, I think there's some real positives in the market today that you're starting to see kind of a sigh of relief. Yes, there's still a lot of volatility ahead of us, but there's been a collective sigh of relief. I'd point to a couple of things. As companies begin to expand and to change and to kind of look forward, keep their head up and look down the road for opportunities, that's when you know that we've kind of made a change, a mental change, if you will. The great example of that is, well, there's actually three. J.P. Morgan's acquisition of Bear Stearns was tremendously opportunistic for them, and but they were looking down the road. The same goes for Bank of America's acquisition of Merrill Lynch. And lastly, and now a contested acquisition between Citigroup and Wells Fargo for Wachovia. Those guys are looking down the road after we exit the recessionary type environment that we're in today, and looking to make hay with it. And I view that as a real, I think you'll really start to see the economy loosen up as you see more and more of those types of activities.
I'm not sure that the individual consumer will see anything immediately. This is a huge package, and the impact of it is the federal government is going to appoint 10 or 12 entities to allow them to help purchase these assets, primarily mortgage-backed securities that are in default from banking institutions. That will take probably between now and the end of the year, I would say, for that capital to start rolling back into the banks. And so immediate tomorrow, the next day, you won't see that happen, but I would hope that by the end of the year, you will begin to see a fair amount of capital flow back into the banks that will loosen up the liquidity a bit to allow institutions that currently may not have funds to loan will be able to do that by the end of the year.
So you think what we're seeing today with the Dow being down so low is an indication that maybe investors are recognizing that this is not going to happen as quickly as they thought?
Yeah, I think there's probably a combination of people concerned about continued volatility and thinking they need to get out of the market and maybe buy U.S. Treasuries as an example. You've seen also in the last few weeks more of a global financial problem where companies in Europe and Asia are also experiencing similar issues in their own economies, which is probably beginning to bring the Dow down even further. So I think it's a combination of people not thinking things are going to happen right away, continued concern about what the future is, and whether this package does all the things that it's supposed to do.
I want you guys to be really clear about, what do you really tell people to allay their fears about what they hear on financial networks and when they see their stock prices down so much, because people are telling people, whether it's their brokers or whom, some of them are telling them, get out of stocks completely.
Well, if you have a long-term horizon, I would say doing whatever you've been doing relative to investing in your 401k or whatever you've been doing, a conservative, broad, diversified investment portfolio is probably the best thing to do. If your time horizons is very short term, then perhaps you should be much more liquid and remain in bank deposits or government treasuries or something of that nature. It really depends on the individual investor and what their time horizon is and what they're trying to accomplish, what their goals are.
When you say short term, short term, like I'm approaching retirement in a year?
2 to 3 years.
2 to 3 years.
Right.
Okay.
Would be short term.
Okay.
And we view this as a crisis of confidence more than it's not a run. There's not a panic. There's not an outright panic. 500 points down is not that. I mean, yes, it's not great, but it's not also a crisis either. And as long as we continue to take the right steps, the government takes the right steps, the company, the big corporations take the right steps to rebuild the confidence in the economy, then I think you'll see that turnaround happen fairly quickly.
And finally, gentlemen, how do you see the financial situation, the financial pullback affecting individuals and businesses in Oklahoma overall?
Well, I'd say to date we've been insulated a little bit from what's gone on in the rest of the markets. We have not seen the very unhealthy escalation of real estate prices over the last several years that has led to a lot of the subprime problems you've seen in other markets. So from that perspective, Oklahoma's been a little bit insulated. We've also had a good job market here throughout the state. Energy economy's been good. So we've had relatively low unemployment issues here, not a lot of foreclosures. So the Oklahoma economy has been good, and I think it's benefited the consumer to date at this point. And I don't think you're going to see a real credit crisis here at the consumer level, because the Oklahoma banks are generally quite strong and have liquidity and have the capacity to loan money, and we will continue to do that. On a national level, will it creep in and impact us? Sure, absolutely. The liquidity problem around the country will affect large companies here. It'll affect perhaps states and municipalities in bond issues and things of that nature, which will have a trickle-down effect to the consumer. But by and large, I think we'll remain somewhat insulated from the rest of the markets, but not totally.
And Greg, to your to large investors, people interested in private banking?
Well, very similar to what Mark said, we view it as it's very opportunistic right now. You can buy municipal bonds, you can buy lots of bonds at what are great rates for investors. They're not great for the municipalities, but they're great rates for the investors. And so as long as you have cash, there's great opportunities out there.
Are you seeing that excitement, though, that prices are so low now and this is an opportunity? Are you seeing that?
Yes, we have many clients who are out looking for opportunities right now, both on active businesses as well as in the markets. So.
Okay. Well, gentlemen, thank you.
Thank you very much.
You.
This is Business Now. I'm CLYTIE BUNYAN.